Hello and welcome back to Explain the Charts. Today is October 21st, 2025, and we are diving deep into the USDJPY currency pair, which is seeing some explosive action. The pair is currently surging, trading around the 151.90 level based on live reports, pushing well past yesterday's highs. First, let's break down the major news events that are fueling this significant move. The primary catalyst is the political shift in Japan, with the confirmation of Sanai Takaichi as the new prime minister. Markets are interpreting her leadership as a sign that Japan will continue its ultra-loose monetary policies, often referred to as Abenomics-style stimulus. This expectation is putting significant downward pressure on the Japanese yen, as it suggests the Bank of Japan will delay any interest rate hikes. This sentiment fuels yen selling and is a major tailwind for the USD-JPY pair. On the other side of the pair, the US dollar story is a bit more complex. While there's broad support from easing US-China trade tensions, the Federal Reserve is providing a headwind. Market tools are now fully pricing in 25 basis point rate cuts for both the October and December 2025 meetings. This dovish Fed stance could limit the US dollar's ultimate upside potential against other currencies. However, the monetary policy divergence between the US and Japan remains immense, with the US Fed funds rate around 5.25% compared to Japan's policy rate near zero. This massive interest rate differential continues to be the fundamental long-term driver for a stronger USD-JPY. Now let's turn to the charts to see how this is playing out, starting with the daily time frame. As you can see, USD-JPY has been in a powerful long-term uptrend for well over a year. We saw a major corrective phase back in late July and early August of 2024, where the price pulled back sharply from above 161 to a low around 141.6. Since that August low, the price has been grinding its way back up, forming a clear pattern of higher lows and higher highs. This structure confirms that the primary bullish trend remains firmly intact. The price consolidated for several months, building a strong base of support before this recent push higher. Specifically, the 148 to 149.50 area has acted as a solid floor throughout September and October, absorbing any selling pressure. This recent rally, which started from last week's low around 149.37, is very significant. The political news from Japan appears to have been the direct catalyst for breaking out of that recent range. Yesterday's candle on October 20th was a strong bullish bar, closing up 0.68% near 150.80. Today, the price has gapped up and continued that momentum, decisively clearing the 151.00 handle. This breakout above the key psychological 150 level is a very strong bullish signal. When a major level like this breaks, it often signals the start of a new leg higher in the prevailing trend. Bulls are now clearly in control in the short to medium term. Let's zoom into the 15-minute chart to examine the recent price action more closely. Looking at the rally over the last couple of days, we can see the aggressive buying pressure. The move has been impulsive, with very shallow pullbacks, which is characteristic of a strong trend. Any minor consolidations, such as the one we saw around 150.80, will now likely act as immediate support on any dip. The price is currently quite extended after this powerful move, so a period of consolidation or a minor pullback would be healthy. For intraday traders, the first key support level to watch is the area around 151.20, which was yesterday's high. Below that, the 150.80 zone, representing yesterday's close, becomes the next important level. The most critical short-term support, however, remains the 150.00 to 150.50 zone. As long as the price remains above this area, the immediate outlook is bullish. So, to recap everything and look ahead, let's switch back to the daily chart for the big picture. The key price levels are now much clearer. Immediate resistance is forming near the current price around 152.00. The primary bullish target is the October 10th high mentioned in analyst reports, which sits at 153.27. A break above that level would open the door to longer-term targets around 154.50 and even the 2025 forecast level of 156.97. On the downside, initial support lies at 151.20 and 150.80. The critical line in the sand for bulls is the 150.00 psychological level. A break below that would signal a potential reversal and target last week's lows near 149.35. Let's talk about probabilities. The bullish scenario, where the price continues to climb towards 153.27, seems the most likely, and I'd place its probability around 70%. This is supported by the powerful fundamental catalyst and the clean technical breakout. This outlook would be reinforced if the price holds above the 150.80 level on any pullbacks. A bearish scenario, with a move back below 150.00, has a lower probability, perhaps around 30%. This would likely require a significant event, such as surprisingly hawkish comments from the Bank of Japan or a major risk-off event in global markets that triggers a flight to the safe haven yen. The most important upcoming event to watch is the Bank of Japan's policy meeting on October 30th. Any statements from Governor Ueda will be scrutinized for hints about future policy, and this will be a major source of volatility. We also have the U.S. Fed meeting on October 29th, where the market will be looking for confirmation of the expected rate cuts. Thank you for watching this analysis on Explain the Charts. Please remember, this content is for informational purposes only and should not be considered financial advice. Trading involves significant risk, and you should always conduct your own research and consult with a professional before making any investment decisions.